And Stefan presented on a previous DecisionCAMP. And he is not only experienced architect using BPMN, DMN technologies, and he's a great speaker. So it's a pleasure to I enjoyed listening you last year, and I'm looking forward to what you're presenting this year.
Okay, thank you for the introduction. What I would like to do in my presentation today is give you an example of a business case from the banking, and that is based upon a project that I've been conducting with one of the top 3 banks in Belgium. The project was about helping them to comply with regulations coming from the European Banking Authority in order to avoid, in fact, the things that we saw in the 2008 banking crisis. And for that project, we built, in fact, a decision engine with DMN, which is in fact the core of the solution. And it is integrated or orchestrated also. It orchestrates and is orchestrated by both process models and case management models. So what I will show you is in fact a decision-centric orchestration using the 3 standards from the object management group, being DMN, BPMN, and CMMN. Okay. But first of all, perhaps a little bit highlighting on the business situation and the challenge here. This is a project that has been conducted with a Belgian bank, Belgium being part of the Euro currency group within the European Union. And in 2011, the European Union, based on the catastrophic dramas that followed the 2008 banking crisis, they founded the European Banking Authority in order to guarantee or to avoid, in fact, the same type of crisis in future and to contribute to the stability of the euro currency, of the financial market, and also to protect banks against the kind of crisis they had in 2008, but also to protect, obviously, the customers of these banks. And as from 2011, the European Banking Authority, together with the national banks of the different countries, they started emphasizing on credit risk management as one of the pillars to provide that financial stability. And they started creating guidelines for the banks. The banks need to comply with these guidelines. And these guidelines, they keep on evolving. The European Banking Authority also created some joint inspection teams together with the national banks of each country to closely monitor and inspect all the banks within each country. And the banks, they do not have any choice about following or not following the guidelines. They need to do it because it can lead to penalties. Octavian already told about it or spoke about it from Goldman Sachs. So that also is the case within the European community. And in worst cases, it can even lead to withdrawing, in fact, the license of the bank. So it is a rather important thing for the banks. So the architecture or the way we solved this challenge within the bank is by applying, in fact, 3 standards from the object management group, and at the center it is DMN. So at the core it is all decision centric. there is a DMN model. I will talk about it later, which in fact detects all kinds of credit risk increasing events on customers. And we're talking here not about retail customers, but about non-retail customers. So it's about everyone having professional activities. So in the bank I'm talking about, we handle a portfolio of about 400,000 customers using this engine. So, and all of these customers ranging from individuals having professional activities such as freelance consultants or butchers or bakers, up to smaller and very big corporations, but also governmental organizations. And it handles all kinds of credits, ranging from simple things like credit cards up to very, very big investment credits and loans. So it is a wide range of things that need to be handled. But a decision model, obviously, or a decision management platform only will not solve it. It needs to be embedded in the processes of the bank, and it needs to be embedded also in the life cycle of the customer relationship, in the life cycle of the credit contract management. And in order to do that, we need to be, first of all, to determine and to define what each of these approaches will support. And if we look at it, the DMN part, or DMN, is used to, in fact, handle all the decision and business logic behind this. So everything that needs to be decided in terms of business logic is done by a decision engine. And here what we're talking about is really the what. Yeah. So what kind of loans and credits do we have? What are the rules of engagement with our customers? What are the business policies to be followed, etc.? And we want to closely monitor everything that happens within these customer organizations, and also everything related, obviously, to their credit risk. And it needs to be done in a consistent way. It needs to be done accurately, and it also needs to be very traceable. So the joint inspection teams from the European Banking Authority, they come in. It's like some kind of police force. They're continuously there within the bank. They can come also unexpectedly. And you really need to demonstrate that you have this all under control. But obviously, if something is detected in terms of credit risk increase, then that needs to needs to lead to action, and then we come to the organization needs to pick it up. It needs to pick it up in time. So there are certain service levels involved. Resources need to be allocated to assess certain situations and to act accordingly. But also what's important, as the detection of credit risk increase is the result of the evaluation of more than 100 parameters that need to be closely monitored for each organization. It is also the data logistics that needs to be handled. So making sure that the right data is there on the right time to be evaluated. So that is the process part. And then, process is mostly sequence driven. So that is mostly the actions that need to be taken. They need to follow a certain pattern. They need to for instance, decisions need to be taken by appropriate credit risk committees, etc. That also needs to be monitored very closely. But that is a process that is in a sequence-driven way, well-defined, and can easily be put in BPMN models. But obviously, also unpredictable things can happen within such an environment. And that is something you cannot put in a business process. And there you need something more event-driven, and that's where CMMN comes in. If we have a look at the different challenges that such a situation invokes within a banking organization. And first of all, obviously, if you have a decision-centric approach to portfolio monitoring, because that's what we are talking about, credit risk portfolio monitoring, you need to see portfolio monitoring as a part of the life cycle, in fact, of all credits taken by a customer with a bank and a follow-up of it. And so it is only one part of the entire puzzle. Normally, credit portfolio or credit management starts with loan requests that come in from a customer. So a customer needs money for something, for investments, for credit cards, for whatever. They hand in a loan request with the organization. Then that is handled within a domain which contains a number of processes, which is called loan origination. If everything goes well, the loan is granted. Once the loan is granted, then it needs to be followed up by a series of processes in credit contract management. Obviously, also the repayment of these credits and loans needs to be followed up. That is done within more the financial part of the organization. And that's what we are talking about here. What we want to closely monitor, or what needs to be closely monitored, is whenever there is some event happening which can potentially increase the credit risk of the customer, it needs to be picked up by the portfolio monitoring domain and acted upon accordingly. So here we see a CMMN model, in fact, reacting to all kinds of events that are taking place within credit management. And then we are going to dive into this case model, which is in fact the case model that handles the credit risk portfolio monitoring. And what happens is, so first of all, the first thing that you see here is that the portfolio monitoring needs to react to whatever event occurring on the actor side that might increase the credit risk. I'm coming back to that later on, what that really means. Once an actor is facing, or once an event is captured for an actor, that actor is in fact scheduled for a 360-degree assessment by a decision engine that we built, so the credit portfolio monitoring assessment engine. Obviously, before doing that, we need to collect all the actor data for the actor, and that is more than 100 data points. And a data point can be a single value, but it can also be, for instance, the history of the last 2-3 years of the credit rating of a customer, or of the annual accounts of a customer, containing all of the parts of the annual account. So it can be quite huge. That is passed into the engine, and then the engine will say, okay, I've done that 360-degree assessment. In most cases, it will lead to the conclusion that there is no worry, nothing needs to be done, so then it is ended. But if something needs to be done, whatever, then we get into the kicking off of a number of processes. And a process can be, for instance, a customer needs to receive a new credit risk rating. So suppose that he has a BB minus now, it will be reevaluated, and the result of that will be that he goes up or down in the rating. Or it might be that the customer needs to have a review, which is a rather modest screening of the customer, but it can also be quite heavier, and that is then a screen. Yeah, and for all of these things, we have processes in place. Now, if we look at the first part of this model, then the first thing that needs to happen is that credit risk events are detected. Yeah, and that needs to be done in a very consistent and industrialized way. So, what is a credit risk event? I have already talked about more than 100 data points or types of data that need to be monitored for an actor. Well, every change in whatever of these data elements leads to scheduling the actor for a 360-degree assessment, and that is done day by day. So whenever during a day's time something moves for the customer, it can be, for instance, new financial information we received or the bank received through whatever channel a new annual accounts for a customer. That means that there is new information. It can be positive, it can be negative, but that will be assessed by the decision engine, and then the decision engine can act upon it if possible or if needed. And there are different categories of things that can be checked, and that is, in fact, the things that need to be checked are called credit risk triggers. That is, in fact, a logic that is applied to one or more of these data elements that we receive, and if a trigger is hit, that means that normally something needs to be done. It can be a hard hit. A hard hit is really something going wrong, and then also the regulator expects that you report that immediately and that you take action on it. If it is a soft trigger, then it depends a little bit on how many of these soft triggers are hit. But if there is a certain threshold that is reached, then also you need to take action. Now, what kind of triggers can that be? Financial triggers, such as, for instance, annual accounts or turnovers or whatever. Rating increases or decreases can be a trigger. Changes in collateral. So if you have closed a contract for a credit and one of the collaterals is a building, for instance, suppose that something happens with this building, then that can also lead to a trigger that this needs to be, the situation needs to be assessed. There are some behavioral triggers, like, for instance, not meeting the repayment schedules, credit registry. That's more an external kind of trigger that is about the national banks, for instance. They have registries where they keep information about legal structure of organizations, etc. So if that kind of information comes in, then that is also a potential trigger. And then there are some legal things. If, for instance, there are legal problems with a customer, that can also be a trigger. Okay. All of these, so these categories, we're talking about around 65 different triggers with their own logic, ranging from very simple logic until very, very complex and extended logic. And they're always, whenever an event happens, all of these triggers are assessed for an actor. Yeah, and it happens in a split second. And so, for instance, if certain days there is information about all customers, and that means that about 400,000 customers need to be assessed. That is done in a batch operation. That takes about 10-15 minutes at night. And then we have all assessments. Some days it's only a few thousand actors that need to be assessed. The challenge here is mainly getting all the data in. There are as I already told, it is a large number of data elements that need to be monitored in order to detect all of these events. They're also coming from a lot of different sources, so internal back office systems, but also external data sources such as the national bank registries or financial information coming from organizations such as Graydon, etc. And what is also a challenge is that certain of these information or data elements have update frequencies of that it can be updated any moment, and some of them will be updated only once a year. For instance, an annual account is only published once a year, so you only get that information in also once a year. And everything between, it can happen at every moment until once a year in between, so that can come in as a detected element. So that means that this part is very important. That's collecting all of the actor data. And in fact, what we do there is, as this is a daily process that is run, so based upon changes in actor credit risk, potential actor credit risk events, these actors are checked by an event listener, which in fact compares the data of yesterday with the data of today. As soon as there is even the slightest difference, the actor is scheduled for assessment, and then it is passed into the DMN engine. Okay. And within the DMN engine, this is in fact the highest level of that DMN engine. Here you recognize all of the trigger categories that I earlier displayed, so the financial ones, the rating ones, etc. In fact, these all refer to underlying DMN models, and within each of these DMN models, there are there is a decision service evaluating all the triggers within the category, and the logic for these triggers is built using BKMs, so business knowledge models, and all these business knowledge models are in fact contexts with box expressions. And this can be very, as I said, a trigger can be very simple in logic, but it can also be very complex. For instance, here for the rating, we will there assess, for instance, how did the rating evolve over the last year, for instance, and then see whether there is a problem or not. Okay, but the basis is in fact all the data that has been collected, that is put into the system. And the first step of the logic will also first do some data transformations before, in fact, the actual business logic is performed. Why do we do that? We get a lot of raw data in from a wide range of back office systems, internal and external systems, and the way the data, the raw data are presented or as input for the decision engine is not always usable as such. Sometimes it's really technical codes. Then we transform them in something that is business readable in order to do the logic really on a readable way in decision tables, etc., that everyone can understand. And we also do some data quality controls at this level, because you might expect that the data quality is done before kicking off the decision engine, but that is in reality, it's not always the case. So we need to make sure that if there is a data quality problem, that we first of all notice it, that we handle it appropriately, so that the model does not really stop working and does not produce any garbage either. Yeah. And then the model itself runs through three, let's say, aggregation steps. So here we have the first step, which in fact evaluates all of the triggers within all of these categories. The result of that evaluation with all data involved with it lands here. So here we get a list of about 70 trigger evaluations for the customer with all kind of explanations in it, etc. Then that is passed into a second step of the logic, which is in fact the classification of monitoring purposes. And I'm coming back to that later on, which is in fact different degrees of actions that might need to be taken by the bank based upon the evaluations that are here. And every trigger is either a hard or a soft trigger for one or more of the purposes that we find here. Once we find more than one or more monitoring purposes that need to be pursued, then we create cases, and that triggers off the processes that need to handle these cases. And also here we have underlying logic, which also resides in underlying DMN models, such as we have that here and here. Yeah. So once the engine has done its work, and if action is needed, then we pass into, let's say, the follow-up or the action phase of taking action on a customer regarding his credit risk. And then we kick off BPMN processes, which will usually consist of handing a case to a credit risk analyst who will do an assessment. He will get all the information coming from this engine, which will help him in doing the assessment. He needs to come up with an analysis result, which is in fact a proposal for one or more credit or credit risk committees who will then need to take a decision, and that decision needs to be implemented. So when the decision engine creates a case, that is in fact the structure that we have. So so the last step of the logic provides in fact all the information for the case. So it will determine a case ID, a case type, which indicates which of the processes needs to be kicked off. It will also determine, the engine will also determine what is the entity, because a bank has a lot of, has certainly a few subsidiaries like a leasing company or a commercial finance company, etc. And if the credit contracts are within these entities, then they need to be passed for further action to the entity which has, in fact, the highest credits outstanding with the customer. Within these entities, there are business lines like teams that handle public and social organizations, teams handling larger corporations, or teams handling smaller companies, etc. The engine will also determine what is the severity level. If it is high, that means that the due date for action will be very short. If it is not that high, then there will be a timing of a few weeks to really handle the cases. It will also indicate on what topics the analyst needs to work. That is called monitoring purposes. A monitoring purpose can be, for instance, a re-rating of a customer, but can also be in the other extreme, a UTP assessment. UTP stands for unlike to pay. That is, in fact, the most severe stadium that you can reach or stage you can reach as a customer. That means that the bank will put you in default, and in default means also that the bank needs to take provisions and write off or do depreciations on the value of the risk portfolio. So it has severe impacts. What we also feed back is certain triggers can perhaps not be evaluated as data is not available. Then that is also important information for the analyst handling the case, because then he can chase that information or make sure that he at least assesses that. And we give also a number of details and reasons why the case is created. And these are mainly points of attention for the analysts that need to work on the cases. And here, what I've done here is because we didn't have that at the bank, and there I used, in fact, the Trisotech implementation of SDMN. So I just took a DMN model and I just extracted the output section of the case handling, just to demonstrate here that SDMN will certainly also have a lot of added value compared to not having SDMN as a model. And also, it will probably also in the future play a role in the facilitation of the orchestration between decision models and process or case models. So yeah, once a process is then kicked off, we end up in BPMN then. For instance, here we have a portfolio review of the customer. And as I said, it ends up usually there is a task given to a credit analyst who needs to do an analysis. That analysis is then taken to a decision taker, which is usually a credit risk committee or a credit committee. They need to take a decision. And once a decision is taken, it needs to be obviously implemented. Because if, for instance, the decision here is taken that a customer needs to be put on a watch list, which is not as severe as a situation as a UTP situation, but that also means some financial depreciations for the bank, then that needs to be implemented in the back office systems of the bank. And also, as from that moment, probably the bank will not grant any loans anymore, or will not easily grant loans to that customer as from that moment. And yeah, that means that we feed back to the highest level here, which is in fact that implementation in the operational credit contract management. That is in fact what happens when it needs to be, once the decisions of portfolio monitoring, for instance, putting someone on a watch list or a UTP decision or whatever, that needs to be implemented here, and that will have an impact on obviously the further follow-up and management of the credit contracts for that customer. Yeah, and so what you see here also, the case management, because I think there are quite some misunderstandings also of what case management really means. For me, it is not only limited to individual cases to be handled for a customer, for instance, but it can also mean really the life cycle of either a customer relationship, or in this case, the life cycle of all credits for one customer. And within that life cycle, you have different events that can then trigger parts of this case management model. Yeah. So if what I will do now is in fact highlighting a number of achievements that we got from the project. One of the things that we managed to do is usually when in a traditional development environment or in a traditional IT development, you see that requirements are drawn or are written by the business and then thrown as a beer mat to IT across the wall, and then IT does its thing and comes back with a solution, and that leads to quite some frustrations and misunderstandings. And what we do here is a different approach. In fact, what we do is we put the business at the steering wheel of its own business logic and process logic and case management logic. They put it in models, and these models are at the same time, when the models are ready and tested and simulated, the model is in fact already the automation. And this is important also in the context of traceability. Because if we look at the regulator here, what they also want to see is that you can demonstrate as a bank that you do not only have data lineage, which is you can prove that all the data that you put in reports about, in this case, credit risk portfolio monitoring, come from the appropriate sources and are correct, etc. But what you can also do is achieve what I call logic lineage, because you should not consider the decision engine that I showed there as something that is static. It is moving all the time. The regulator comes with new regulations, guidelines, recommendations all the time, and you need to comply with that. So that means that your logic that you have implemented is also a moving thing. Suppose you get an audit from the regulator or from an inspection team, and you need to demonstrate why you took the decision to put a customer on a watch list, for instance, 2 years ago. It's not only important to be able to demonstrate what data that was available at that point in time and that it came from the right sources. It's also important to be able to demonstrate what logic did you apply at that point in time 2 years ago. So you need to know with what version of the decision logic you took that decision at that point in time. And that you can perfectly do using this kind of architecture. What I also see what I also find very attractive here, and within the bank, we're not there yet that we have everything orchestrated in an optimal way. We have the DMN engine is fully operational. The integration with the BPMN engine, as they are not using very well integrated tooling, needs some work, and also in the case management is the case. But I'm convinced that if you use a combination of integrated decision, process, and case management engines with the easy interaction between all of these models, then you can very quickly achieve a very consistent and well-built structure for managing the entire end-to-end life cycle of credit management and monitoring, and all the processes that need to take place, all the events that can occur, appropriately acting upon these events, etc. So I think that is something that certainly needs to get more attention, I think, because it can not only help banks, it can help insurance companies in assessing their insurance portfolios, but it can also help government organizations, etc., to get really a grip on the entire end-to-end management of their business, including life cycles of customer relations, of contracts of customers, of contract portfolios of customers, and everything that needs to happen there. And also in a fully traceable way. And what we achieved, and that is that we achieved that all of these things here, decision logic, case management logic, and business process logic, they're fully defined by the business. And in the project, the IT people, they provide obviously the integration of these models in the overall architecture. They integrate these models or using the engines, they integrate it with applications. And we're at a point now that IT is not involved anymore in defining business logic. They leave the business logic to the business. And the business builds the logic using models, tests it, simulates it, and they have the full responsibility here. That is a huge change, obviously, in the culture of an organization, but I think we need to go there. A business needs to take back the control that they lost because there were no other ways in the past, and that they gave to IT, but it doesn't belong there. If something goes wrong with the bank, and here we have quite some things at stake, like a bank can need to pay a lot of penalties or can lose licenses, etc. So we're not talking about peanuts here. It's important that the people that need to take the responsibility on the business side are able to take that responsibility. Another thing that, because sometimes there are terms used such as citizen developers and stuff like that, and here then professional IT developers. I really do not like that, because citizen development, or it sounds a little bit like do-it-yourself things, and it sounds a bit like not professional. That is not the case. Building decision models on the business side, case models, process models, etc. It is a métier. It is really something you have to be equipped for. You need to have the right skills, know-how, etc., expertise to do it in a good way, to do it in a very structured way. And it is as professional as what IT developers are doing. So that's why I use different terms here. Okay, so I'm practically at the end of my presentation here, and I hope that I have demonstrated using this business case that, in fact, the Triple Crown standards, DMN, BPMN, and CMMN, have the potential of really offering a lot of added value to organizations to really meet the challenges like the one at the bank in terms of compliance with regulations, etc. And that they can do that by giving the steering wheel to the business. It increases the understanding within the business, as it is a standard way of documenting processes, decision tables, decision logic, case management structures. So it really brings, it opens up, let's say, the black boxes that have started to exist by putting all of the business logic in complicated programming logic and bringing it into models, and using obviously an expression language for getting the logic in. This is really a very nice thing. That is, you build the model, as Bruce said. I'm not a programmer. I'm not a programmer either, but I'm very happy that I can build these models and that I can bring them to an engine that's executing them, and that you can also in a project very well scope and delimit the role and responsibility of IT versus the role and responsibility of the business. And it creates also autonomy between both, and you create very clear contracts on what the one is doing and what the other one is doing. And it's a much nicer way of working together between business and IT. And which is a very important thing of the standards is also the interoperability. Right now, the project that I've been doing with the bank is about implementing guidelines that come from a central, let's say, authority or government body or regulator body. I think we have a way to go here also. Instead of writing these guidelines and so on that then need to be implemented by the banks, it would be much better if also the European Bank Authority and other institutions alike, they create, in fact, these decision models, etc. You could, as a bank, then take these models, implement them, or you could call them as an API or whatever, and integrate them with your own logic. And that would be a very nice thing to avoid that everyone, every bank or every organization needs to reinvent the wheel about the same type of logic. So that is what I wanted to share with you. So I hope that this was interesting. And if you have any questions, don't hesitate.
Okay, Stefan, great presentation. Thank you very much. It's really, if you forget about these new shiny things, this is the best presentation we could expect from real world, from more traditional approach, but with all latest achievements we have. And this is probably one of the best final point we can have for DecisionCAMP. Okay, let's see if you have more questions. Questions? Okay. Actually, it's yeah, go ahead. Go ahead, Danny.
Stefan, how is this received from the business people? You mentioned that there's this profession of modelers that's kind of starting to happen. Is that embraced by business in the bank, or are they seeing this as somebody else's job?
No, they don't see it as somebody else's job, but it has also, I've started working with the bank about 4 years ago when we started building our first decision models. It was not in framework of this project, it was a previous project, and it was about loan origination. And then there was, at that point in time, you need to have, first of all, some champions within the business that have a certain vision for this kind of things. And luckily enough, within the credit risk department, there was a manager who had been looking for, in fact, the things that are now solved with DMN. He came also to follow a training with me together with one of his colleagues, and then we started talking about how can we use that within the organization. At first, there was quite some reluctance, mostly from the IT department, because they had a big project for loan origination that they wanted to handle, and they didn't want to use DMN at first. And they, first of all, they said, no, we will not do that. We will we will continue working the more traditional way. But then they went into the wall and they finally accepted to start using the decision engine and the DMN models that we had produced, because we said from the business point of view, we said we are going to create the models anyhow, because they not only help us to document the logic, they also help us to test it, to do simulations with it, and to know whether it will work or not. So we had credit risk models, compliance models, pricing models, etc., all coming from the business, and they only had to plug them into a user interface. And then that worked, and it was very successful. And then IT made some kind of a click, and as from then, IT said, okay, we have understood now. And in fact, that was also the turning point. They said, in fact, every business logic from now on should be created by the business. So that is a huge step in such an organization, because it's not something very easy. And from the business, then within the business, because we were a small team within credit risk, but there were also a lot of other departments that had heard about the success we had. And they started to ask questions about DMN, how they could use it, etc. And then I started delivering DMN training to all kinds of people within the bank, within the insurance part of the bank, etc. And so it kind of started spreading. Now we're at a point where, we need to think about how will we organize that within the organization, because we have a number of people now, a small group of people that are very experienced in building these decision models, etc. And as I said, it is a métier, it is a craft, it's something that you have to master. It's not, that's why I don't like things like citizen development or whatever. It's not something you do in between other things. It is something you need to focus on. It deserves full attention also to all aspects, because it's not only about creating logic rapidly, it's also about testing, about simulating, about the governance around it, because you can put logic very quickly into execution, but you do not want to make any mistakes, because that could lead to granting loans to people that shouldn't receive it or whatever. It could cost a lot of money, and also it could cost a lot of reputation damage to the organization. So you need to handle all of these things. And so it became clear and from the beginning that we needed to handle that very carefully. And now it is also accepted that it needs to be done with by people that are really have these skills and competences. And the question now is, are we going to centralize that into one place within the business organization, or are we going to keep on having people in all of the different teams and departments doing this kind of making this kind of models? But how do you achieve then the right quality level, etc.? So it still needs some thorough thought and to see how it is implemented. But let's say the business is very positive about it. Also the management, because now they have an insight in the things they are doing already for decades, and they lost, in fact, the insight in their own business. And now they see what are the handles that we can use to improve the business, either the content or also the efficiency. That's more the process things that you manage, and also the business intelligence you get from it, and etc. So it kicks off a new. It gives. It kicks off a lot of enthusiasm also. Yeah, and people that were skeptical at the beginning become less and less skeptical, because they see that it leads to results. And if we wouldn't have had a DMN engine to solve these requirements from the European Banking Authority, we would never have succeeded in meeting the deadlines imposed on the bank by these authorities. And that is also an important thing. So the time to market of solutions drastically decreases. Yeah, and all of these things, when people see that, and they say, now, for instance, if they have new projects popping up, the first thing they will do is, how can DMN help us in a new project, in a new challenge? That's the first question they come up with. Yeah? Because they realize that if they want a short time to market, then yeah, that is the starting point. Now, the rest needs to follow also, and that is the bottleneck then. IT needs to be able to follow in data collection, in proper data management, in building user interfaces and integrations and stuff like that. And that is still a challenge. Yeah, and that is also taking most of the time. Yeah.
I think you have another question there too. Thank you. Thank you very much.
Yep, my pleasure.
Okay. Question? Gediminas? Yeah, go ahead. Unmute yourself.
Yes, I just was listening, and no questions from my side. I probably could just echo to everything what was said, and DMN has helped us already for years, and it managed to decrease the complexity of delivering projects with the predicted success rate. So yeah.
Yeah, this is what you just said. It's a quite common experience for many people who implement decision intelligence oriented to business people, first of all. There's a lot of new responsibilities for them, and your presentation is really good. And I think you don't mind, but it's already public. Would be this tonight, but we're going to point some of our largest customers. Because we, for example, we have from business unit to business unit success story make it work, but it's initially, especially for new customers, change of psychology, who is responsible for what, is really difficult, and we're going to use your presentation and recommend our customers to look at this. Thank you very much. It's really, really
if they
good.
have any questions, don't hesitate to call me. Yeah.
Are you available for consulting if necessary?
Certainly.
At least online.
Yeah.
Okay.
Yeah. Sure.
Okay. Thank you very much, Stefan. It's a really good presentation. And let me stop recording. Okay. This is